The gentleman from Florida, Mr. Donalds, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Witnesses, thanks for being here. Really appreciate it. Chairman, I just want to first thank you for your work and your leadership in data privacy. I think that's going to be really critical for our country, for Americans. So I thank you for all your efforts. I want to touch on a couple things. And Mr. Reuter, you might be able to help me with this. So the witnesses understand I'm a recovering banker. I used to work, I got my start in commercial banking, community banking, actually. That's where I started. Went from a teller to a credit analyst. I underwrote loans. I helped small businesses get access to capital. I was in the banking industry before Dodd-Frank, before the financial collapse. And I left because I didn't want to do bank workouts, frankly. I went to work in insurance. But I remember a lot of my colleagues, some of who I hired, who stayed. And they would tell me about all the work that they had to do post Dodd-Frank. I think one of the things that has come up, not just in this hearing, but in a lot of discussions, has been the fact that there are limits of banking locations across the country. Could you speak to some of the impacts that Dodd-Frank has had on small community banks and even some sub-regional mid-sized banks?
Yeah, I think one area that's really evident is the mortgage lending business. You've seen a lot of medium and small banks exit that business due to the new regulatory requirements. We've always been a strong mortgage lender, and our mortgage portfolio performed extremely well during the financial crisis. Why? Because we're in the community. We underwrote those loans. We know the local businesses. We know their employers. So they were well-made loans. Some of the new regulations that came out of Dodd-Frank make it hard to make loans to self-employed borrowers. Lots of different parts of the regulations make it difficult to run an efficient, cost-effective business. And so some have just simply exited the mortgage business.
So let me follow up on that. If you are a small lender, I was a small lender, but the regulatory burden of Dodd-Frank just makes it prohibitively more expensive to do business. What happens when you leave a community? Is the community basically left to, and this is, no disrespect to Bank of America or Citi, they do good business, or Wells Fargo, but are the people in that community now left to larger institutions who have the capability to deal with the regulatory burden of Dodd-Frank?
Those banks do a good job on the ground with good teams, but it is different than when it's a locally headquartered bank with the ownership also in that community.
You know what? Let me shift a little bit. Let me ask you about. I like to reimagine regulation. I think we're at this point in American history where we can start really rethinking the regulatory environment for the next 100 years of what the United States is going to look like. In your opinion, and Ms. Lee, Mr. Knight, Mr. Berlin, you can all chime in. What do you think the regulatory environment should look like going forward in the United States?
I think at its core, regulation is good. It's when we start adding layer upon layer upon layer and making it more complex and difficult to comply with. So I think we should always go back to what will ultimately protect consumers and help communities thrive. That should be the main motive whenever regulation is initially drawn up and amended as time goes on.
Congressman Donalds, I would say that regulators, one of the key principles that we talk about, we say the word regulate the regulators, is the regulators themselves need to be just as accountable as the businesses they regulated. That's why it is so important for the CFPB to have, appropriations from Congress, given what all it does, having that direct oversight of appropriation, and not, an agency should not do regulation by enforcement to come up with a rule. They should follow the Administrative Procedure Act, and ultimately Congress should be able to overturn a regulation as it is basically acts like a law, or at the very least have the REINS Act for the cost of regulation. So accountability for the regulators, I think, is a very important principle that we at the Competitive Enterprise Institute are promoting.
Well, I would agree with you. We'll see if the third branch of government will help to rein in the second branch. Ms. Lee, any your thoughts?
I would say as the technology evolves, back to Jim's point, that we do need to have that strong consumer protection, but we also need to have it fit for purpose in the sense that a lot of the technologies that are coming onto line and using it aren't fitting into a 1930 rule, aren't fitting into a 1990 rule, and we need to make sure we have proper rulemaking to oversee, to be able to address the actual risks in which these new products are doing, the services in which they're actually providing, instead of slipping them into an old rule that really doesn't apply to them and put maybe arbitrary, overlay onto them, which doesn't apply to the businesses in which they're doing.
Mr. Knight, sorry, I'm out of time. Mr. Chairman, I yield back.